All right, Happy New Year, everybody, and sorry for being slightly late. It is the first day of the trading year, and I wish everybody happy 2023. And first of all, of course, we hope that this year will be a better trading year than last year, or even for investment. Hopefully it is going to be a great year, yeah, and I'm sure we will, because for last year we have actually learned a lot of things through Traders Talk. I think we have actually shared a lot of content to you guys, and of course this year hopefully we will continue to actually share even more, yeah. Of course, if you guys help us share this out a bit to more viewers and listeners, and also readers, yeah, don't forget our newsletter. We also publish one newsletter. In fact, this year we have actually launched another newsletter. Yeah, one for our normal weekly newsletter, and another one which we are also going to explain later today, which is Quick Bites, which basically is actually more on active trading, or basically we will actually give more insights about what and how we basically trade, with specific examples for everybody's learning, and that is actually launched a couple of days ago. And of course, if you guys have received the emails for our first Quick Bite issue, then of course congratulations. You would have actually read it. And of course, if you have not subscribed, then we will actually put up a link inside, so that you can get hold of our new newsletter, which is Quick Bites, yeah. And we'll explain why we also call it Quick Bites, yeah. And let me post out the link, yeah. Okay, hopefully you can actually get the link to our newsletter, Quick Bites, and our current newsletter, the weekly one, which we actually publish, almost coming to 2 years already. Lots of contents, and also we have migrated to a new website, new newsletter hosting, which is actually called Substack, yeah. And hopefully we can actually continue to improve on what we present. And there are a couple of other things which we actually line up, so that it makes it easier for you guys to actually follow the newsletter, which the trainings which we actually put on our newsletter. But of course, that would be coming in this year. Yeah, hopefully we can actually find more time to actually do up those contents. Yeah, and of course, not forgetting our other channels, TikTok. It's going to be a very busy year for me. But of course, all these are actually for you guys, those who are following us on the live shows, following us on the newsletter, and also following us on TikTok. Congratulations, and hopefully all these contents will do some good and will help you improve your trading, and at the same time generate some income throughout these bad times. Yeah, inflation is high. We got to actually make up some income to actually compensate for inflation. Otherwise, what we have or what we earn is actually going to buy less rice or less bread. Okay, all right. So okay, last year I think we have actually covered a bit in our newsletter what transpired last year. Yeah, what transpired last year. And of course, last year was actually, how to say, it was actually a bad year for the stock market performance overall. But of course, I would say not everyone would actually um, uh, get a bad year. Of course, if you just came into the investment scene, and of course, if you have actually bought or accumulated stocks when it was actually low, then of course it would have been actually a good year. In fact, 10-15% returns. If you have just started your investment journey this year, it would not be a problem. But of course, if you have held on to stocks from last year's and whatnot, especially if you have came in 2021, then of course it can be a very painful year for you guys because in general, the stocks have actually dropped at least 30%, depending on the good stocks have actually dropped 30% in at the minimal, yeah. And of course, the if you have actually bought a lot of hype out tech stocks, then your the losses can actually be much more up to 90% or 95%. Yeah, okay, and hopefully you are not in that category. Yeah, so in general, if you are down 30% is basically, I would say, normal. That is not so much of a worry, because at the end of the day, what we do here in terms of trading or even investment is actually not a short-term thing. Yeah, it's not a short-term thing, but basically we need to actually plan it out on a longer perspective. And in the past shows itself, we have also talked about things like dollar cost averaging, trenching in good stocks, and when each of the levels have price level has been reached, basically we would just automatically get into these stocks, because eventually, if you are buying good stocks in time, basically those stocks would actually return back up, and of course, even if the price continue to go up, when it rebounds, then of course the lowest entry price would actually get the highest return to compensate back to those levels which you have bought at the higher side. So not to worry too much. At the end, just continue what you're doing, continue to actually be engaged to us or into the how to say, keep up to date in terms of what's happening in the market. And a great way is, of course, listening to us. Okay, all right. So we will do some recap in S&P, what has actually happened last week, and then, of course, for those who just followed us on this show, we will have one section on talking about the past week price action, and basically also what we expect to see the following week. And of course, we will try to actually have a learning session at the back of the show. It can be a training, it can be some insights, it can be something that just just things that we feel that would benefit you guys. All right. So let me just put up the chart. So basically we will look at the S&P 500. Let me put this up. Okay. 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 Let me just make me smaller. Okay, you don't need to see me big. Okay, so basically we use trading view a lot. In fact, trading view is actually one very good charting tool, and it is actually free. You can actually register for free for this chart, and of course, if you actually want to actively use it, I would actually recommend you guys to actually use the paid subscription, which basically costs I think $100 over dollars, $400 over US dollar. The basic subscription will do, and you would have some kind of charting tools, alerts and all, which will come actually quite handy. So SPX. Okay, firstly, of course, we look at what happened for the year. Let's put at 1 year. Where's 1 year? 1 day, 3 months, 6 months, 12 months. Okay, so basically a huge red candle, right? So basically, if you look at 12 months, the S&P 500 basically have gone down by 19%. 19%, not too bad. Basically, I think it has actually went all the way down to close to 30%, if I'm not mistaken. But overall, it closed 19% down. Basically, what we achieved in 2021 basically we have lost everything just in 1 year. Yeah, and of course this is mainly caused by the uh, the Federal Reserve raising interest rate, yeah, raising interest rate, and of course during the pandemic, after the pandemic, basically the Fed was printing money, and after they have created a huge inflation, topping 9.1%, then of course they had to actually again reverse what they have done in 2021 and started to actually increase rates starting first quarter of 2022. Yeah, so that's basically what happened last year. Okay, and of course this is SPX and Nasdaq itself. The decline is even more, 33%. 33%. In fact, you can see that it has actually taken out the COVID gains, almost half of the COVID gains, uh, which came in 2020, 2021. Yeah, you can see that this huge red candle have taken off 30% of the market high, which was reached somewhere in January 22. Yeah. Okay. So I mean, let the past be the past. Basically, we just wanted to see where we are headed going forward. Yeah, going forward. One day. Okay. All right. Okay. So for those who have joined us, don't forget to like and share the show so that we can get more people on board. Yeah, because I think if you are trading, it's quite important. Basically, just to be in touch of what's happening in the market, and of course, the show which we have just give you how to say some insights like every start early of the week. Basically we have it on Tuesday, right? Every Tuesday early of the week, just give you some insight of what to actually expect for the week. Yeah, and of course last Friday itself, you can see that the market actually rallied towards closing. Yeah, rallies towards the market close. Yeah, you can actually see that there is actually a bullish candle with a very long tail, yeah. Because of course, during the start of Friday itself, the market has actually came down. Thursday, after the jobs report, the market has actually rallied by, I think it was quite high, about 60 over points, right, on Thursday. And of course, Friday itself, it gave back some early part of the trading day. It actually came down, but of course, once it reached 3,800, yeah, which is basically the support level which we're actually talking about in some of our newsletter and some of our past sessions, right? The 3,008 level is actually one level which is basically still having some form of good support. And of course, on Friday itself, once it touched 3,008, yeah, 3,008, it had actually bounced off. You can actually also see that quite clearly in the shorter time frame for the day. Yeah, let me show you guys. Okay, yeah. So you can actually see this is actually the level 3,800 here, right? So basically, once the candle touched 3,008, it had actually bounced, came down again, close to it, it bounced off. Another time, it bounced, and then I think about 2 hours, less than 1 or 2 hours before closing, it actually rallied back up, back to almost. Where it opened. I think on Friday itself, it went down only about 20 over points, if I'm not mistaken. Yeah. So that was actually Friday. And of course, today itself, I would actually expect the market to be a bit more positive for the first half of the week, at least. because like on Wednesday itself we have the Fed minutes, yeah. But basically, I think you would actually expect uh, to see what you already know like, from the Fed minutes, right? That in February they are going to do the rate hike. Whether it's going to be 50 or whether it's going to be less would be again dependent on the CPI release, which is actually expected to come in. I think second before second week of January, and of course the second round. The CPI, the inflation data, will actually come in on when is that February. Yep. So the stories are always the same, but of course, when the actual event happens, whether it's CPI or whether it is the Fed rate announcement, then of course that would actually cause huge volatility or movements in the market. Yeah. So this is again what we would actually expect all the way till first half of the year. Yeah, because first half of the year itself, these things on rate hikes and all would actually still continue. And of course, the things that the market actually want to see is the slowdown or the reduction in the rates, which we already saw one round from 75 basis point to 50 basis point, basically a reduction in increase of 25 basis points. Then of course they would actually want to see a lower than 50, eventually zero, then probably stay on no change for some months before it actually starts to reduce to cutting rates back down. Yeah. So of course, when that happens, of course, that's the time where there is a likelihood of the market going to how to say rebounds, but of course it can actually happen much earlier before that. Yeah. So these are the key events which you need to actually look at. Yeah. So let's go back to daily chart. Okay. So this is here. Where are we here? Okay, we are here. Okay. Okay. Yep. So again, 3,000. We are actually at about 3839, right? 3839. Of course, I mean, if it actually goes up, of course, one level is actually 3,009. 3,009 would be actually one threshold which the market needs to actually reach next on the higher side. Yep. Yeah. Of course, the trend can actually still be how to say long term. You see, the short term, we have been somewhere here in October, right? We have actually had a rally, then we actually came down here, yeah. And the S&P can actually continue to trade within this so-called downtrend pattern here, right? It can actually continue to trade this way. Yeah. So we need to see it actually breaching certain levels. 3,009 is actually one level. If it actually breaches up, then of course we see some light that how to say, we can have a bigger rally. I would not say it's going to reverse up yet until the things which I actually mentioned earlier on the interest rate reductions. Yeah. Then we can actually see a more permanent or more confirm uptrend, right? But up till then, basically, we can have so-called bear market rallies where we can actually go and come down until that actually happens and move sideways a bit while that so-called inflation coming down, rates reversing. Yeah. So that can actually still happen. So until then, we would still trade in a similar pattern which we actually did last year, where we basically take short trades, quick profits. That's why we started to how to say, change also the contents of ours to actually launch this quick quick bites newsletter, so that we can actually go into examples of quick short trades where we actually take quick profits, in stocks or in the S&P or even in ETFs. So that we will actually continue to actually do monitor and actually keep up also so-called potential trades in our watch list, in our watch list. So NDX is actually more severe, right? Severe, where you can actually see that it is actually close to the lows, close to the lows, and of course, NDX, Nasdaq counters being more sensitive to the interest rates, right? Interest rates. So basically, the pattern can actually continue to go down even further. I mean, I'm not surprised, of course, if it actually goes down more, especially if you talk about having negative news coming through, Yeah, of course, negative news would be things like CPI. Yeah, if the CPI goes up, then of course there is no way Nasdaq is actually going to escape breaching its last year's low. Yeah, last year's low. Of course, on the job side, we see that the market from the last data report, right, it is actually as forecasted. Then, of course, the market is happy. As forecasted, it is actually not as good. I mean, how to say? For the jobs report, they actually want bad job report, yeah, for the market to actually go up. Yeah, so this Thursday itself is actually the non-farm payroll, and of course, if the how to say, if the additions to the non-farm payroll, right, that means more, if there's actually more addition to the workplace than expected, then of course that will bring the market down. Yep. And of course, when market goes down, it's also opportunities for us. Yeah, and we would need to actually take opportunities on such volatility. Yep. So depending on what type of trades and what type of counters, because most of the time you can actually see that market give a very a huge reaction, or basically overreacts to news, and of course, sell first, stock later. Yeah, and of course, once that comes, right, then you can actually also see on the event day, if you actually actively look at the events, because most events comes in at 9:30 p.m. Okay, so most events comes in 9:30 p.m. So the first market which will be affected are the futures. If you trade futures, then of course you can put in positions before or after if you're actually trading the event. Yeah. And of course, once the market opens, then there is actually the first reaction, which will basically comes in, I would say, first 15 minutes of first 5 to 15 minutes of the day. Yeah, first 5 to 15 minutes of the day. And of course, once things stabilizes, you can actually see possibility where the price action is actually moving, whether it will actually continue to go down or whether it is actually going to recover some of the bigger or overreaction of the market. Yeah, then of course that's where we can actually put on basically some short safe trades, which are stocks which are basically leveling at support levels, which strong supports, like what we did in Apple last week, where it was actually at strong support, and when it actually dipped one day, we took opportunity to actually long the stock in during the day and actually exit the following day. Yeah, so that is how to say, how we are actually going to capitalize on the volatility, which would expect we would expect another 6 months. Yeah, of course, before that, then you would need to actually have your watch list, and basically we have our watch list, and you can actually also see where is our watch list. You can also see in our watch list here. Okay, we have shared in our newsletter our watch list. Some of our watch list, not all, but some key ones we have actually shared in our newsletter. If you have not read it, go and subscribe on the links which I've posted just now, and I will just go through briefly the watch list. Of course, this is actually the 2022 S&P performance. You can actually see that the only two sections which is green for the year is actually the energy, which is the best performing, of 40% up for the year. Best performing, and stocks like SOM have actually gone up by 81%. For the year. But of course, in the past years, they were basically the worst performers. I think before 2021, before 2020, mid of 2021, I think the energy sector was one of the worst performing sectors in the market. And of course, starting mid of last year, mid of 21 onwards, and last year itself, they were the stars for the market. They were the stars for the market. Then the other sector was actually healthcare. Healthcare did quite well also last year, mainly because of the defensive nature of those stocks. It actually performed quite well despite the most of the stocks coming down, right? I mean, there were a lot of stocks which was continuing on an uptrend. Of course, the bad ones, I think Amazon and Tesla were one of the worst big cap performance. Amazon dropped 50%, Tesla almost 65%, and of course, up till mid of last week, the decline have stopped for, I think, about 3 days. Despite market going down, Tesla has actually started to turn green, but I am and I'm not going to long Tesla, because I mean, chances are the market can actually continue to go down, and Tesla would also continue to go down further, right? So Amazon, Apple was quite okay actually up till last quarter. It hardly dropped from its high up till last quarter, but of course, towards the last quarter, it had again sold off more than 20%. Microsoft is another one which basically started to also drop after the after the second quarter. After the second quarter, it actually started to actually come down also. Bankings were not that bad actually, but of course, towards the last quarter, it had also a bit of a sell off for the banking sector. So worst performing communication, best performing energy, consumer cyclical, second best. So what can actually happen for 2023 is that some of these worst performing sectors would actually reverse to actually go up to the top. But again, probably not until second half of the year, I would say. Not so fast. Just monitor the economic events to actually see when basically these bad performing sectors would actually start to have its reversals. Okay, so some of the stocks which we have our eye on for 2023, not immediately, I would say, probably just on radar, depending on when the price levels are actually reached. Then of course we would actually see to potentially trade it, or basically also go into buying it up as long-term investments. Yeah. So Nike is one. Nike is one. Of course, after the last earnings, which was actually announced, Nike had already came up from, I think, 80 over dollars. 80 over dollars now. It is actually about 117. Yeah. So that was actually the first event which actually pushed Nike back up from its lows. Yeah. And of course, the second event which we basically look forward to is the China reopening, because a big bulk of Nike sales are actually coming from China, and with the COVID restrictions being lifted, then of course the expectation is that the economy and the market would actually start to improve, to become better. Yeah. So, of course, if you look at the news, there is actually quite a lot of bad news saying that, how to say, China now is actually in a very bad shape because everybody got COVID and all. I would say they have probably recovered by now. Probably 50%, if not 60% of people in China have already got COVID since the past 3 weeks. Yeah. And of course, I mean, once you get it, of course, I mean, if you're not sick, if you don't how to say, you will recover lah. I mean, basically, you're not sick, you don't die, right? You will recover. I think most of them have actually already recovered. So of course, that would actually bolster their confidence, because when they first opened up the restrictions, right? There were a lot of fear in the market, or in the people. There were a lot of fear in the people that they would actually contract COVID, because there is actually no safeguards. There is no screening. Everybody can go anywhere, whether you are infected or not infected. People don't know. So when they did that, there was a lot of fear. So people stayed home. A lot of people actually stayed home, and in fact, they took precaution because they are afraid. But once the first wave came in, and a lot of them actually so-called got infected, a lot of them got infected. But of course, they took some time, some days or some weeks to actually recover. Then of course, that again now they are already infected. I mean, they would have some form of self-immunity for at least 5 to 6 months. I mean, if they have recovered and there's no problems, right, they would be more confident. And of course, that will how to say, bring about normalcy to life in China. And that is actually how to say, quite fast. And of course, today itself, if you actually see the Hang Seng index, right, I think Hang Seng today itself went up by 2%, if not mistaken. 1.8%. Yeah. So today Hang Seng actually went up by 1.8%. Okay. And of course, when the market actually opened, right, it dropped it dropped down, it gapped down, and it actually I think about -2%, if not mistaken, -2%. But it went up very, very quickly. It went back up very quickly. So I tried to take opportunity to enter some trades on the Hong Kong side, options trade. Yeah, on the Hong Kong side, mainly some of the what is that? The index options. You can actually do the Hang Seng index options. Yeah. I tried to enter, but of course, maybe I'm too greedy. I put on too high price, thinking that it will go down further, right? But of course, it reversed quite fast. Yeah, quite fast. So missed that opportunity. But the early positions which we actually put on the Hang Seng index, right? That actually turn back into profits quite fast. Yeah. So yeah, Hong Kong side, I think if you don't know any stocks, then the index options would actually be how to say, one area where you can actually try to trade options on that side. Yeah, on that side. Because that gives much higher opportunities. Yeah, but of course, take time because last few days there were some retracements coming through on the index, but today it actually had a strong reverse. I'm not sure whether it will continue to spike up all the way towards Chinese New Year, yeah, because mainly the pre-Chinese New Year the market is actually quite hot, yeah. Okay, so yeah, the other one, of course, Starbucks, similar situation. Then what is that? Then this Nike, right? Big part of the business is also in China. Yeah, in China. Then Amazon. I mean, it is not immediate. It is not immediate because basically we still need to actually see whether the how to say, whether the reversal will actually come. Yeah, and of course right now it is actually at 80 over dollars, right? And of course, if it comes to the level 65, uh, if it comes there, then of course that is actually a good opportunity for some long trades or even some investments. Yeah, and of course for Amazon itself, we have already been trenching in. If you have seen our past show, we have already been trenching in since 80 over dollars. Yeah, 80 over. I think the next level would be 80. Next level for us would be and yeah. Next level for us, I think it would be 82, if not mistaken. 82 is the next level for us. Yeah. Okay, so financials, Visa is one Visa. Yeah. And of course, the levels which we look at is at 190. Yeah, 190 Visa. Another one which is actually a CME. This is actually the Chicago Mercantile Exchange. Is basically where all the options trades goes to. Yeah, options trades. If you're trading options, this is the exchange which actually clears the options. Yeah, and of course, if you are trading more, then of course, this company will actually make more money. Besides options, futures are also there. Yeah. So at the moment, it is actually at 160 plus, if not mistaken. Yeah. And of course, our target is for it to come slightly down towards 150. Yeah. But of course, this stock, the premium is actually not that high. If you are selling options, the premium is actually not that high. So of course, the trades which you actually need to mix for this is uh, either some covered calls or some long trades. That means calls. You can also structure out with some short puts or some short spreads. Yeah. Not forgetting Apple, which is currently at support. Yeah, which is actually currently trading at support at about 129. And of course, this is I think quite strong support because I think it actually tried to go down below 129. I think one time, two times. And of course, it had actually subsequently bounced up. So, like last week itself, we did some long trades on this, and we also explained it through our what is that? Our Substack Quick Bites newsletter. Yep. So if you go into our newsletter, then there's also a link where you can share our quick bites to other readers, your friends, whoever. You can actually click on the link. In fact, it will be good if you actually share it even now, so that I know that those who are listening right now help us out to actually share this out to more readers. Yeah. So we did this quick bites. As I said earlier, we would actually do more quick trades this year, more quick trades in and out, in and out, in and out, to actually get a bigger profit for the year. Yeah, because if you held on to directional trades or even if you're talking about neutral trades, if you held it on too long, the problem is that the events, basically the monthly events that actually announce, you do not know where the direction is. Yeah, it can be to your advantage, it can be against you. Yeah, so of course, if you have been making profits, and after 1 month, if you say you buy a call, after 1 month you are in profits, and then on that month you have not sold it, you continue to hold it, and then the news comes out, the market sold off, then basically that will wipe out all your profits. So instead of doing that kind of trade or holding on longer, because there's actually no so-called sustained longer so-called overall uptrend, right? It is actually still very choppy, up and down, up and down, up and down. So you need to actually take quick profits. Yeah. So that is actually also what we explained in this Apple trade, right? Basically, what we did was we actually did a synthetic, and of course, if you have been following, we have also covered how to actually structure out a synthetic stock using options. Yeah, basically, it is buying at the money call and selling. What is that at the money put. You can even do it by selling out of money put. Yeah, and of course the out of money put would actually finance the at the money call, and at the end of the day, you might actually get to enter a trade at a very so-called low cost. Yeah, like the trade which we did. We bought at the money call, which is at 130, and then basically we sold out of money put at 12125. Yep. And of course, because we did it on a down day, the volatility of the counter was actually quite high. So the premium which we actually got from the out of money put was able to actually fully cover the at the money call which we actually bought that day. Yeah. And then of course we got into this trade at a credit of 28 cents. Yeah, 28 cents. And of course, uh, we held that only for 1 day lah. We held that trade only for 1 day. So we did it on, I think, on the Wednesday when it was actually coming down, and on the Thursday, when the how to say, when the job claim report came, right? Job claims report came. When the market actually rallied, we actually exited the trade with 275 profits. Yeah, so we entered with a credit of 28 cents. We exited at 250, means that we actually got a profit of 278 less commissions, probably $3. Yeah, so yeah, we exited it here. And of course, if we would have held it for another day, yeah, if we would have held this for another day, uh, uh, on Friday itself, the market came down, and I would say basically half of the almost 40% of the profits would have been wiped off. Yeah, depending on when you exit. Of course, if you exited, if you count it towards the end of the day, market had actually rallied back up, right? So Apple price recovered, but within the day itself, you can actually see that Apple price actually came down by almost $2 during that day. So $2 during that day, you can actually see that most of the profits here would have been wiped out. Yeah. So if you are afraid, right, then of course you would have exited before you slept, right? Probably then the profits would have been 50% lesser than what you would have got when you actually exited during a rally. Yeah. So the idea is, of course, look at the price action when market is actually coming down on strong stocks at strong support levels. You can actually take a high delta long trade. High delta would be trades like this. Synthetic is actually a very high delta, because when we actually structure out a synthetic, I would say what we did was probably at about 80 over delta. Yeah, if 80 over delta, yeah, because we still had the out of money put, yeah. So of course, for every dollar change in the stock price, then of course, if 80 delta means that your option value would actually go up by 80 cents for every dollar change. Yeah, so that's a high delta trade, and for stocks like this, then you can actually how to say, take the chance to actually do such kind of trades. Yeah. Yeah. So we will how to say, we will continue to issue new issues of quick bites. It can come anytime. So do watch out in your emails. If you have subscribed, you would have actually get email immediately when we issue it out. Yeah. So by all means, subscribe to it if you have not subscribed. And if you have subscribed, share it to your friends so that they too can actually subscribe and basically receive our notifications. How to say, of high potential trades which we actually get into. It's not that you need to actually enter the trade. You can actually take a learning from what we do, also what we do, and basically also see how we actually analyze our entry, and what are the so-called option structure which we actually choose to do, and how that kind of option structures behave. And of course, we do quite a lot of advanced option structure, but at the same time, we also have some kind of risk management and rationale behind those so-called advanced options trade. Advanced does not mean high risk, yeah. We have some things to actually back out such kind of structures which we actually enter. So that is what we will do this year, and hopefully all those things would be able to actually help you guys to trade better, to actually learn more, and of course, most importantly, to fight inflation. Yeah, fight inflation. That means basically you get more pocket money to actually compensate all those things that are increasing in price. Yeah. So yeah, so that's all for this week, and hopefully you guys would have a great 2023. Don't worry so much on the market volatility, because we have a lot of different kind of option structures to actually suit that kind of volatility. In fact, we love volatility more than ever. You see, yeah, because those are high chance that you can actually get quick profits in and out, which can actually be quite lucrative. Yeah. So until next week, and until the next issuance of quick bites, I hope you guys look forward to receiving it. And if you like what you read, please click on the like buttons on the newsletter. Yeah. In the current newsletter have all these like buttons, right? So please do click on it. Of course, the more love we get, the more efforts we'll actually also put and into giving you guys more. So all the best for the week, and see you guys again. Bye bye.